Hi everyone and welcome to Inderes TV. Today we're going to talk about Media, Games and Invest because they published their Q4 report and financial statement bulletin for 2022 yesterday. And here with me I have the analyst Anton Damstén. Welcome.
Thank you, Isa.
Could you just give us in a nutshell what does Media, Games and Invest do?
Yeah, sure. So they essentially operate what's called an ad software platform, which through it they facilitate the selling and buying of digital ads. So this is essentially making sure that advertisers who like to buy advertising space and publisher who wish to sell advertising space essentially have a market where they can transact. And this is what MGI provides.
Kind of a platform for media.
Yes. Yeah. Basically, it's for most part sort of a self-service platform where both the publishers and the advertisers can interact with, and then sort of the matching of the transaction is done all automatically in what's called programmatic advertising. And this is, of course, a quite large and rapidly growing market as digital advertisement is sort of taking market share from more traditional non-digital ad formats. So
if you just take a look, dive deeper into the Q4 and 2022, how would you summarize the last quarter and the whole year, and especially in terms of organic growth and debt ratio?
Yeah, so I think both quarter and year-wise, it was quite a strong year. They displayed quite, significant growth numbers. On a yearly basis, it was 29%, and then for Q4 quarter, it was 15.8%. It's been sort of on a full year basis, significant share of the growth has been acquisition driven, but now in the last quarter, it was almost completely organically driven growth. So out of the 15.8%, 30% was organic growth. And basically they raised their guidance at the release of the Q3 results, and they basically now reached the top end of the revenue guidance and then beat their adjusted EBITDA guidance. So I think in overall it was quite a strong quarter to finish out a strong year, especially when we look at sort of the underlying operations. There were some sort of a little bit of mixed news also coming with MGI announcing that they are shutting down a couple of their MMO games. And then in conjunction with this, they took basically what they call the one-time amortization of 23.6 million. And this then led basically to the operating profit expressed as EBIT being negative. But otherwise, I think it's quite good. We also saw sort of the net financial expenses increase, but according to the company, it was mostly sort of non-cash, non-interest related expenses, and sort of the reoccurring interest was more about 7.5 million. And then I guess you touched a little bit about the leverage. So yeah. MGI has conducted quite a few acquisitions in the past few years, and this then, especially last year, drove their leverage quite high. So they basically look at net debt to adjusted EBITDA, and they had a target range of 2 to 3 times, and based on Q3 last 12 months, they were already up in 3.6 times. So then this quarter, or in this earnings release, they now announced sort of a couple of measures to rein in this leverage. And the first one was that they securitized their receivables, which essentially means that they sold the income stream from their receivables for basically a lump sum of cash on which they pay some interest also. And this essentially injected about 48 million euros into the company.
Okay, so measures being taken there as well.
Yeah, and the other thing they also announced that now in February this year, they also sold their stake. They actually owned about 8% of a listed Swedish game developer called Enad Global 7. So they basically now decided to sell it, and we estimate they will get about 20 million euros from that. And basically taking that into account on a pro forma basis, their net debt to adjusted EBIT ratio would be now down to 2.6 times.
So measures there as well. And I guess this also has something to do with the communication about the shifted strategy focus. I mean, this has been going on for some time already, but now company clearly stated that they have been going from a gaming company and within games from PC more to mobile games, but more to a shift to the digital advertising part. As a whole, how would you, in terms of revenue, how big are these different parts, and what do the actual income streams consist of?
Yeah, so as you mentioned, so I guess we can give a little background. So MGI then stands for Media and Games Invest, and the company actually started about 10 years ago as a pure games company. And then essentially they have added the ad platform on the side, and then started pivoting more and more towards that. So basically, especially starting now, Q1 2022, they have more and more sort of focused and pivoted towards this ad platform. So then starting in 2022, they basically no longer report revenues on the games section, and rather they split their segments into what they call the DSP, or the demand side platform, and the SSP, which is the supply side platform. And that's basically the supply side is the side that then serves the publishers, which is essentially the owners of websites and apps, essentially those who have ad space to sell, whereas the demand side then serves the advertisers who wish to sort of place ads on different websites and mobile apps. And there, the company skews quite heavily to the supplied side. So 2022 revenues was about 90% came from this supplied side platform segment, versus then the remaining 10% from the demand side. So basically, that's how they report their revenues going now. They did do.
But where do the actual income streams come from? Where does the money come from?
Yeah, so it basically works mostly. They have primarily, let's say, two income streams. One is from the ad platform. So essentially, they take a cut, which they term the take rate, from every transaction that happens through the platform. So that consists about that, together with ad sales on their own games, consist about 80% of their revenues. And then the remaining 20% is basically game sales and in-app purchases in their games.
So a clear focus on the ad part, and the games are more kind of a side business in this whole entity. Yeah.
In one way, the other big thing is that the games do act as what MGI terms first-party content, which essentially enables them to basically gain first-party access to the customers on these games, which provides them with a set of data and opportunity to try out basically their performance of their ad platform quite quickly. And of course, the additional revenue. Yeah.
So that's kind of, the games are also kind of a gate into the platform, and their revenue is created by these transactions with the ad.
Yes, it basically guarantees them an ad inventory, and basically a very defined ad inventory, which they can basically point to when sort of selling their platforms to advertisers, that we can at least guarantee that we have these games and these possibilities to place ads on. And in addition to that, they of course work with then third-party publishers who essentially then basically interact with their ad software platform.
So it's a kind of whole own ecosystem, this platform.
Yes, it's a little bit like in a sense like a stock exchange, basically, where they conduct this transaction through different means, but the more and more popular one is through sort of a bids auction, essentially, where advertisers can bid on each individual ad impression, and then the highest bid essentially wins.
Yeah, and if you look at growth, historically, the company has a track record of non-organic growth, and there's been a lot of M&As in the history. But looking forward, they should, if I understood it correctly, you're counting on more and more organic growth, as we saw in Q4 as well. What are the drivers for organic growth going forward, and do you think there will be more M&As still on the way?
Yeah, so as we touched on, they had conducted quite a lot of acquisitions lately. I would say, though, that revenue growth has been through a combination of both organic and acquisition driven. So there has been quite strong organic growth underlying also. Of course, then through these acquisitions, they reach sort of a higher leverage than their goals, and basically at that point they decided that they would not focus on any further M&A transactions. So it hasn't really been on the horizon lately. Now, of course, with the leverage coming down a little bit and it being a good terms here, buyer's market, they might be interested, but I think we'll have to wait and see there. Overall, I think the big drivers then of organic growth going forward is partially just through the growth of the market itself. I think is a big thing. So as we see basically more and more of the ads being digital than non-digital, there's sort of a quite a significant tailwind that sort of pushes the market forward. And the other part is essentially just MGI capturing sort of market share through onboarding new clients. And this we saw happening in 2022, where they onboarded about 130 new software clients, which of course then drove the amount of ad impressions, which essentially is a proxy for volume. And they reached now a sort of a new quarterly record in Q4 of 181 billion ad impressions. In 2022, we have seen what is essentially called the CPM, or cost per thousand ad impressions, which essentially is the price of this transaction. It has been lower in 2022. Would it start increasing? That would increase the revenue quite significantly, as MGI takes a cut rate of every transactions. The bigger transactions, the bigger the take rate would be. So that could be a potential upside. But yeah, I think mostly we will probably see it through new clients, and if sort of the macroeconomic situation clears up a little bit more, probably through more spending of these clients on the platform also.
So we're talking about potential upside in potentially more clients and more clicks and higher payout ratio per transaction.
Yes, I think that's a good way to summarize it.
And even though the higher there wouldn't be a higher price per transaction, there's still a growing market and potentially more customers within it.
Yeah, yes, I think that's correct way to put it.
Yeah, but a lot of potential, but there are also risks. What about trends and bigger risks in the market, like protection of privacy and this kind of stuff? How does this affect MGI? Do we have any?
Yeah, that's a good point to bring up. So of course, this is the big trend here is also the privacy, or the privacy of the consumer or the internet user, where of course in sort of matching these digital ad sales, a lot of data and information is collected on the website and mobile app user, and this is coming under more and more scrutiny, so to say. And we have already seen some regulatory changes, but maybe at this point, more importantly, have been sort of large companies like Apple and Google, who own large ecosystems, essentially enforcing this privacy more and more. And I think that's part of the reason why sort of as we discussed, the CPMs have been lower, because the less information the less information and less inaccurate or less accurate information on the consumer, the less that the ad click is worth, so to say. So that's definitely a factor that we could see. Perhaps we could see the CPM staying at a lower level or even going lower. But I think at this point,
when you say CPM, what are you referring to?
I'm referring there to basically the price of the transaction. Basically, what it would cost to place an ad on a website. This, of course, varies a lot based on the website and who is getting targeted, but sort of in general terms.
So it's definitely a risk in the bigger picture. But something
in the bigger picture.
Yeah.
But then at the same time, as we talk, we have the tailwind of the growing market. And then basically market participants like MGI and other companies within this space are working on new solutions, essentially that wouldn't rely on this more, you could call predatory identifier methods of collecting information. So MGI itself basically has, for example, a solution they call Moments AI, which is based on a contextualized method. So rather than profiling the individual user, it would sort of more profile basically the contents of the site, and based on that, provide an ad. And this is actually in some ways quite an old method, of which you can see in most magazines of car ads in car magazines, or essentially where you're trying to reach your customer through basically the contextual concept. Here, of course, in the digital, the thought is, of course, to do this automatically. So basically, you would have a program or an algorithm that can identify and read the website and understand the context, and based on that, then try to find sort of a buyer to place an ad on those sites.
So to put it short, already solutions in place for the potential risks in the market, or the already existing risks in the market.
Yes, there is, and it's not only this contextual, there are also other ones. It's sort of still up for debate, sort of which will become the dominant one, or if it will become something completely different. We also see the bigger participants like Google working on their own systems of basically serving ads without too intrusive collection methods. So
yeah, but this is something that's concerning the whole market, not specifically one company.
Yes.
Let's go forward.
One thing I could say that regarding that, so to come back to MGI and their game and basically the first party content, this also works a little bit to lessen that risk, as they have basically their own user base from where they can sort of in a privacy compliant manner gather data. So they have sort of a quite known customer base or known user base already in place, of whom they know sort of what type of ads to serve to.
Which is also minimizing the risk when looking at the bigger picture.
Yes, and minimizing the trend of getting sort of shut out of identifier-based solutions.
Yeah. So last question. What about the valuation and the given recommendation at the moment?
Yes, our current recommendation is a buy recommendation, and we have a target price of 26 Swedish kroner. The valuation has been low for the most part of this year. We saw it in 2021. The share price increased quite rapidly, and then basically not only MGI, but basically the whole sector or all the market participants in this came down quite a lot. In many cases, we are talking 60–70%. And it has depressed the valuations of the whole sector, but especially for MGI. So we believe basically at the current valuation that the risk-reward ratio is quite attractive.
Okay, very well summarized there from Anton Damstén. Thank you so much for answering all these questions. About MGI and the report newly written today, and also the extended report about the company will be found in the links below.
Yeah.
Thank you.
Thank you.